Welcome to the Investing Podcast presented by Tusk Media. This is Outsider Trading, an audio and video deep dive into the people, places, and things that we find most interesting in the market.
Hey everybody, welcome back to the Investing Podcast presented as always by Tusk Media. I'm Andrew Hall. Joining me today is Ben Nye. Today we're going to be talking about Google and their earnings. So in light of that, why don't you check out our YouTube channel, youtube.com/TuskMediaLLC. Shameless plug and a seamless segue right there. We're also on Twitter and Facebook, twitter.com/TuskMediaLLC, facebook.com/TuskMediaLLC. Ben, let's talk about Google. We promised the people we'd do it. We've already hit on Facebook, so maybe a nice little compare and contrast to just kind of talk about, I guess, two different ad stories. So what were the big headlines you had that stood out on Google?
So the biggest headline is the revenue, which came in line, and then the EPS. And Google's gone from one extreme, excluding stock-based compensation and adjusting EPS, to the other extreme, and including European Commission fines as part of their not only just income statement and adjusted results, but also part of their operating income. Like, this is a recurring event. A $2.7 billion European Commission.
You can just count on that.
Yeah. So it looked a lot worse than it was. EPS came in at 501. But you strip out that $2.7 billion charge, mess around with the tax a little bit, and you get $8.90. Street was looking for $8.25. So all in all, Google quarter was fine. The revenue was just in line. The Street didn't like the traffic acquisition costs. Mm-hmm. We can talk about that.
Yeah, that was kind of the big metric. Again, we touched on Facebook earlier, and go watch that video, but we kind of talked a little bit about all the levers they had to pull, talk about, the key metrics we were looking there in terms of ad impressions, price per ad. But here's where you really kind of saw that challenge that Google faced for the quarter. And again, not an awful quarter for them by any means, but just kind of an okay quarter, maybe especially compared to something of a peer like Facebook. But traffic acquisition costs really did some damage.
Yeah. And so what is a traffic acquisition cost? Well, this is the cost that it takes to acquire traffic. Cost it takes for Google to get someone to actually make a search. And so
you just used the definition in the definition.
Yeah. So what Google does is, for example, if you are looking on your iPhone, and this was a story, and you are on Safari and you do a Google search, well, Google has to pay Apple a portion of that money, and that hurts margins. And the more searches that are being done on browsers that aren't Google's, well, the more the traffic acquisition costs rise as a percentage of the Google revenue. So that was a big headwind, because they were seeing phenomenal growth on the mobile side. Because a lot of people use iPhones, especially those high value users, Google's going to have to pay more for that, with the more mobile growth that they get.
Yeah, it's kind of the opposite of Facebook. Facebook, the challenge was how do we adapt to an increasingly mobile environment? Well, we're seeing now that 87% of their revenue, something like that's coming from mobile. Google's facing that same challenge when, I don't know about you, but I use Safari just because it's the app that's on the iPhone. And so that's the most popular phone device. People are using that, and it makes it really challenging because, again, having to continue to kick back, especially as people go more and more mobile. So it's kind of one of those challenges. So if you really want to get Google, don't use Google Chrome. Sounds like if you really want to pay them back and make them earn your business, so to speak. So how do do you see a way to combat that? What's the path moving forward, or is this just going to be kind of a state of play as we move forward?
Well, I think this is going to be a bit of a state of play moving forward. I think that Google's really trying to make an effort. This is the whole thing behind their Android platform. It's open source platform, and the reason is they just want everyone to be using it, because then they can get their Google search, and they don't have to continue to pay these traffic acquisition costs. So it's really a lost leader for them. It's Android, because it subsidizes essentially their core Google search franchise. I think that Google will continue to manage through it. Look at this last quarter, and they crushed it on the earnings per share side. they managed to cost X the traffic acquisition cost. They still hit the revenue. Obviously, you want to see revenue beats here, but you're also getting paid clicks up 52% year over year. Got cost per click down 23%, which offsets, but you're still getting overall revenue growth over 20%. So I think if Google can continue to churn out this 20% revenue growth at current valuations, I mean, you got $130 in cash on the balance sheet.
Mm-hmm.
I think it's pretty solid. Plus, they have so many other things going on. So you're getting a core franchise, plus you get all these different options on top of it.
Yeah, talk to us a little bit about all the things they got going on. We can weigh in on kind of all the alphabet initiatives, so to speak.
So the biggest one is YouTube.
Yep.
1.5 billion monthly viewers. Guess how much they watch per day? I'm not sure, maybe we did this before. It's average of 60 minutes per day for 1.5 billion monthly viewers.
So subscribe to Tusk Media.
Yeah, and you'll have to watch at least two Young Bucks episodes. And that YouTube time watched has actually doubled on a year-over-year basis. Wow. Got the Google Cloud Platform. They have an expansion with their partnership with SAP. They continue to move forward on that. I think that with the G Suite of products, I think that's good. They got the Google Assistant. Google Assistant, I mean, people talk about Alexa. Well, Alexa's just one device. Google Assistant is has 70 home automation partners, and these include Honeywell, Logitech, LG. So you can basically do everything around your house just using your voice, and that's all Google. So they got that. They have the Google Lens, which is a new type of Google Glass. They have Daydream View, which for $79 you can strap your Android device into some goggles and be in virtual reality. Or you can buy the Oculus platform for $300 plus all the computer software needed to go along with that. Kind of no-brainer to go with Google. You have more marketing insights where you can actually correlate your ads with people coming into the store. And just the other things that Google's doing with artificial intelligence, when you type into in a menu and you now get a menu showing directly up into the Google search area. You type in job search and you'll get actual job search results. You don't actually have to go to Indeed.com or the other providers. And now they also have 10-minute Google websites. It's a free website builder, and small businesses can build a website in 10 minutes from their mobile device. So I mean, they're just doing so many things to get people using Google, and we didn't even mention the autonomous vehicles.
Yeah.
So
they're taking over every phase of life.
And Google chips. I mean, they're doing a lot.
Yeah. I hope Google chips taste good.
Yeah.
They're not going to be edible. So yeah, I mean, it's kind of one of those stories where you could, if you want to have the bear case scenario on Google, you look and you say, oh, the mobile acquisition cost isn't going away. If anything, people are going to continue to use these. But if you have a little bit of a more bullish view, it's kind of, well, look at all the things Google is doing and look at how they're still able to operate despite higher acquisition costs. Look at the increase of YouTube traffic and kind of all these things. And YouTube, I think, was an acquisition that for years just kind of seemed a little bit befuddling, didn't really make a whole lot of sense from an economic standpoint. Now all of a sudden, you're talking about 1.5 billion hours being consumed a day in YouTube television and all these kind of platforms. And so they're kind of continuing to leverage the assets they have and develop their own assets at a rate that nobody's really matching.
Oh, and by the way, they had 36% market share in China before they got kicked out in 2011. Now they have 1%. Yeah. If they ever came back, I mean, that's a huge market that Facebook's playing in, but not doing right now.
So definitely a huge potential catalyst right there in and of itself. So Google, company that we own, I know you own quite a bit of it, you're a big fan, so we'll continue to hold it and continue to keep an eye out on it. And I don't know, anything else, Ben?
That's it.
All right. This is the Investing Podcast. Thanks for being here. Talk to you soon.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are our professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.